How predictable are the cash flows from your assets, and what degree of inflation protection do they provide?
So one of the primary objectives of FGen is to deliver a stable income for our investors. And therefore, we have a carefully constructed portfolio that derives a lot of its revenues from secured sources, for example, government subsidies or long-term offtake agreements. And typically, these will be long-term agreements that can stretch out to 10 to 15 to 20 years, and that provides us with a very secure revenue profile. To support that as well, we don't just have reliance on government subsidies. FGen has a very flexible mandate that generates revenues across different frameworks and different commodities. So, for example, we generate revenues not just from power, but also from heat. We generate revenues from our clean transport platform, from controlled environment, and from waste and water management as well. But at all times, there is a strong focus on achieving a high level of secured revenues. At the same time, we do that without compromising on a core infrastructure characteristic that is inflation linkage. And many of our revenue contracts do have explicit inflation linkage.
Can you discuss dividend policy? What yields can shareholders expect, and how sustainable are they?
Indeed. So as I say, FGen, its core priority is delivering a stable dividend to our investors. We have progressively grown our dividend for 11 years in a row now, and our dividend target for this year is now 7.96 pence, which we are well on track to deliver with a comfortable level of dividend cover. And at the moment, given our share price, that equates to a yield of around 12%. Which we think is a very attractive yield, particularly looking at the underlying characteristics of the company. We have very predictable cash flows, we have very low gearing, and we also offer the potential for capital growth alongside that progressive dividend.
How do you see the fund's growth trajectory over the next 3 to 5 years?
So the fund's growth trajectory over the next 3 to 5 years is very positive, and that comes down to the nature of our portfolio and the mandate that FGen has. So first of all, FGen invests across a very wide range of environmental infrastructure, across renewable energy generation. And when we talk about renewable energy, we don't just mean wind and solar, we mean biomass and AD and hydro. Other energy infrastructure such as clean transport and energy storage, and also sustainable resource management such as waste and water management and our investments into controlled environment. And so these are all sectors that have a very positive growth trajectory, but also it means that FGen is not solely reliant on just wind or just solar to achieve that growth. And within the current portfolio, we have some exciting assets that we call our growth assets, and which are in which are all in an earlier stage of their life cycle. These are our investments into clean transport, into our land-based aquaculture facility in Norway, and our glasshouse, our co-located glasshouse facility. Now these are all investments that are at a slightly earlier stage in their life cycle, and which are all in varying stages of operational ramp up. And these growth assets all offer the potential for meaningful capital appreciation. And our strategy for these assets is to continue to grow them, to work through their operational ramp up to a point of maturity, which we think will be within the next couple of years. And at that point, we will look to realise the value that we've created. And as I say, that does offer the potential for meaningful capital appreciation there. And so therefore, we think that within the portfolio itself, there is a very good opportunity for growth.